Welcome back. You're watching Lunch Money. We've got a very, very interesting discussion lined up for you. Of course, this year has been about the retail money that has flowed into the mutual fund industry, and we've seen spectacular numbers. There are 15 months of inflows, and this has meant that there's been the MF assets have touched record new highs, crossing the 13 trillion rupee mark. This is as of August, according to a CRISIL report. But given the kind of volatility that we've seen here right now, and with questions being raised about the road ahead, at least for this year, how are things stacking up really, especially after Black Monday? Well, to make sense of all of this, joining me now are Jayesh Shroff from SBI Mutual Fund. SBI Mutual Fund, remember, the fund house manages 80,000 crore rupees of assets. A large part of it is, of course, in debt, but 25,000 crores comes from equity. Also joining us is Jiju Vidyadharan of CRISIL. Gentlemen, thanks so much for joining us. I'm going to start off with you, Jayesh. What are you, how are you reading the markets right now, and what has your strategy been amidst this crazy volatility?
Yeah, so I think definitely this volatility is making people nervous, but our strategy has been to always been to stick to fundamentals and pick up stocks and sectors which we think will perform in any kind of market. So I think we are sticking to basics. We are seeing this as a great opportunity to actually enter a lot of stocks, which maybe an earlier kind of market we were finding a bit euphoric and the valuations were a bit expensive. But so earlier the whole market was about chasing growth. It was a growth market. I think with this correction we're seeing some bit of value emerging, and I think we are using this as an opportunity to actually pick up stocks.
Okay, tell me about your cash in hand right now in the equity funds, Jayesh. How much deployable cash do you have? And over the last couple of sessions, have you been big time buyers in the market?
So as I said that of course we don't as a fund house strategy, we don't keep too much of cash, and we don't generate alpha out of cash. So across the fund house, I don't think we would have a cash of more than 5%. And as I said earlier, that we view this as a great opportunity to buy a lot of value in the market. We see a lot of value in the market. This offers us a great opportunity to get into stocks which we always wanted to buy. So we're using this as an opportunity to actually increase our exposure.
Okay, I'm going to ask you to stick your neck out and tell me where you've been accumulating. But let me get Jiju into this conversation. Jiju, ironically, Monday was a great day for mutual funds. Investors pumped in over 1,000 crores on Monday itself. The average daily inflow has been about 300 to 400 crore rupees. What are the trends that you're seeing? I know it's very early. We've not got the August numbers as yet, but what is the sense that you're getting right now on inflows, really?
Yeah, so in terms of whatever data that we have really looked at, and that is of course data that is as of the month end, you've really seen a significant amount of inflows, which is what you mentioned, when you got into this discussion, which is 15 consecutive months of inflows, in equity funds. I think in terms of the mood at this point of time, I think while you could expect some degree of uncertainty, I still think it's a little too premature really to take a view per se in terms of what is it that we'll really see at the end of the month in terms of flows. I think there's a fair amount of money that has been coming in by way of SIPs as well, which should if you were to look at it purely from a financial planning perspective, which is really the ideal way to invest, I think that should continue. So I mean it's a slightly difficult question really, given the fact that it's just been, it's not even the week to really take a call on whether people would be exiting these funds. I think there could be some degree of stability just by way of the SIP flows that should really continue.
Okay. Are you foreseeing any redemption pressure? Because the fact is that after this kind of sell-off, which has been a one-off sell-off, I completely would give it that. But the fact is that the returns on SIPs have, been hardly there if you look at a 1 year or 2 year horizon. So, do you foresee redemptions, Jeju? Is that a bit of a risk right now?
I mean, there may be some, but I think equity is clearly a long-term sort of strategy. 1 and 2 years should not really be the sort of time frame that people should be looking at. I was just looking at the returns as of yesterday, 7 year and 10 year. I mean, the 10-year returns for the Nifty is still in double digits. Likewise for the Sensex, and clearly equity is a long-term sort of strategy. So, I mean, there could be some degree of redemptions that may come in, and I would actually attribute that primarily to to a lack of awareness rather than anything else. I mean, clearly you need to be looking at equity investing with a long-term perspective in mind.
Okay, I'm going to come back and later ask you about whether in a panic people look at basic principles of investment, but I am going to get Jayesh into this conversation. Jayesh, after the earnings season, most people had said that the markets are looking expensive because it hadn't adjusted to the fresh bout of worries on the earnings front. Given the kind of correction that we've had and the sharpness of the correction, how are you seeing the markets? Are they fairly valued at this level in terms of returns? Take us through what your sense is.
Okay, so in terms of valuations, I think market is closer to fair value than it was. So as you rightly pointed out, I think post the result season, which was quite disappointing, suggests that markets at around maybe 15-16 times FY17, which is a 1 year forward earnings. The fair value where market over a long period of time trades at. However, one caveat here is that market this valuation bands are always like a pendulum, so it doesn't stay at one place, it moves from one extreme to other extreme. So while we talk of 15 times multiples as a fair value zone, it's an average of maybe 13 times to 18 times or 20 times. So, right, so these swings will be there, and I don't think, I mean, now being in this profession since quite a long time, we've learned to take this kind of swings in stride and use it as an opportunity rather than as a threat.
Okay. After this correction, what looks compelling in terms of valuation, Jayesh? What are you going overweight on? What are you underweight on? Give us a sense of the sectoral allocation within your equity piece.
Right. So I think one thing is very clear that people will have to adjust the earnings to the new normal of rupee, which is definitely away from 62 now. I don't know where the rupee will settle at, maybe at 66, 67 or whatever, but definitely it's a new normal which people will have to settle at. So to that extent, exporters definitely become an area of choice because a lot of this rupee depreciation flows through straight to the bottom line. So that's one sector or a theme which has become attractive. So within that, of course, healthcare and IT. Of course, IT has some headwinds in terms of growth in the developed market, but healthcare more or less is immune to such kind of growth shocks also. So I think that is where we are positive on. Apart from that, as I said, that we are looking at a lot of companies or sectors. So utilities becomes very, very attractive on price to book. I think the way utilities, domestic utilities have been hammered, I think they are looking very attractive compared to historical price to book and even on absolute terms. And then there are a lot of local businesses and companies which have got nothing to do with the foreign exchange or global demand and supply situation. So we are looking at those companies also.
Jayesh, while you are talking about export-oriented, and I think that's a theme that the markets have also given a thumbs up to, because IT and pharma have been, relatively, protected from the rout. I'm going to ask you, after this correction, is there a new addition that you have looked at outside the exporters, where it's just a valuation call more than anything else? We'll try and get Jayesh back on the phone because we are having a problem with the link. I would request my producer to get Jayesh on the phone line. But in the meantime, let's talk to Jiju about what he's seeing in terms of inflows. Jiju, give us a sense of where you see allocations or money flowing in, and going ahead, what are the 2-3 trends that you'd be watching out for?
I think, I would honestly, not really look at, the Monday or, this week in a very significant way. Otherwise, I would actually look at money flow also happening to the fixed income categories. There is this entire build-up of rate cuts, that's happening. The 10-year has really largely remained, where it was in, the 780s. So I actually see money flow happening in the fixed income category as well, besides equity and balanced. I mean, equity and balanced, I know that, there is, this week, which has seen a significant amount of volatility, but I would still believe that, there should be flow continuing to this category, because this is more, if I were to put it, this is more, sort of a stopgap sort of a thing, rather than a continuous sort of trend.
Yeah, liquid funds seem to be the most popular as far as inflows are concerned. Jiju, do you see that continuing, given what you're saying?
Yeah. So liquid is, it's typically a category which sees seasonal flows. So it's usually the quarter ends, when you see exits within the liquid fund category. But otherwise, it's a fairly stable and a fairly large part of the mutual fund pie. This is primarily investments by corporate treasuries and HNIs. And this is a segment, which largely sees very little volatility as well in terms of returns. So, it's a category which should see flows going forward as well.
Just for the record, in July 2015, AMFI data shows that out of a total inflow of 1,18,000 crores, liquid fund inflows were 89,825 crores. So a large part of that has gone into liquid fund inflows. Jayesh, I was asking you, after the kind of fall that we've seen, has there been any addition in your portfolio? I know you don't talk stocks, but sectorally speaking, where it has just been a question of valuations, and the valuations being so compelling that it was a no-brainer?
Sure. So I don't know where I got cut off, but I mean, we talked of exporters, and of course beyond that, as I said, that utilities is something that we are looking at it now, because utilities is typically a very boring kind of business where you have fixed return on equity and fixed returns, and to that extent there is not too much of pop-up in stock price that you get. But I think the kind of fall and the hammering that we've seen in that sector, I think in terms of price to book, that has become quite attractive, and that's one thing that we are looking at. Apart from that, as I said, that earlier maybe we were finding some stocks in expensive relative to the kind of growth and return on equity that we've been seeing. And with this fall gives us an opportunity to get into it. So while I'll not be able to comment on in terms of the stock specific names, in terms of sectors, I think apart from IT and pharma, utilities is something which is new. IT and pharma, of course, we already had. Utilities is something new that we are looking at.
Okay, Jayesh, there has been a far greater rout in the mid-cap side of the market than in the large caps. If you were to look sectorally, what's your skew between mid-caps and large caps? Are you tending to go with the large caps right now in this volatility?
Well, I would not. I mean, I don't tend to think so because it depends in terms of the attractiveness of returns that every opportunity offers, be it in the large cap or in the mid cap. So we are looking at every stock, one by one, and looking at it from the prism of the kind of risk-adjusted returns that it can offer us. So whether it is in the large cap or in the mid cap, does not make too much of difference for us.
Last question, and very quickly, rate sensitives, how are you playing, and what is your own expectation on the rate front?
So while we've largely stayed away from PSU banks, apart from one or two larger ones, I think we will continue with a similar kind of a strategy. So in terms of rate sensitives, we continue to remain positive on private sector banks and NBFCs more than PSU banks. And in terms of rate cuts, of course, it's RBI's call, governor's call, and I think the way inflation has been coming down and the way commodity prices are getting hammered globally, the expectation build-up would only increase. But as I said, that it is up to the RBI to take a call, because rate cut is not only about inflation, but it's also about monetary stability and currency stability. So,
fair enough.
But yes, of course, I think this financial year, at least I would expect this financial year. I don't know whether it's going to be front-ended or back-ended.
Okay, Jayesh, we'll leave it there. Jiju and Jayesh, thanks so much for joining us. Meanwhile, the markets are staging a bit of a recovery from the lows of the day. The Nifty is now down only about 14 points, so it's extremely volatile, looking for a stable footing, so to say, 78.66 as far as the Nifty is concerned. The mid-cap side of the market is doing better. Today, it has been the more volatile of the piece, and the mid-cap side is still up about 0.75%. Well, we head into a short break next, but we will be coming back with a lot of management calls, as well as a quick check on Quality Limited. The CFO will be joining us on the other side.